This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Yes, indeed, everybody. We are across Bloomberg platforms. Welcome to Bloomberg Businessweek Daily Radio, YouTube, TV, Bloomberg Originals.
We are everywhere. You cannot get away from us if you try.
I wanted to say Delio. I don't know why.
Hey, it's Monday, April 20th, 2026. I'm Tim Stenovec. That is Carol Massar. Kind of a little bit of a reversal from what we saw last week, Carol, with stocks down and oil higher.
Listen, we warned you on Friday, to be fair, that yes, indeed, it looked like there was progress between the United States and Iran. We thought talks maybe over the weekend, maybe talks Monday. Like there was a lot of stuff floating around, but that's not exactly how it played out. And so we're going to dig into that. And I've definitely seen a bit of a market reset. We're definitely off our best levels of the session, just slightly lower on both the S&P Dow and the NASDAQ 100. But it's a different tone, and I think it's a cautious one as we are waiting to see what happens next. The Strait of Hormuz, though, effectively cut off. The president saying, well, in a conversation with our own Jeff Mason, that it's highly unlikely he would extend the 2-week truce if an agreement is not reached before it ends. Iran saying some things too. So again, I think investors kind of in a wait and see mode here.
Yeah, Iran holding back on whether or not it will participate in any of those peace talks. You mentioned Jeff Mason and his conversation with President Trump. We're going to be speaking to Jeff Mason, our White House and Washington correspondent, in just a minute. Before that, though, a bounce back and records as of late. Questions remain, Carol. Rich Weiss from American Century Investments is going to be joining us on the bounce and also on the Fed and Kevin Warsh.
Yeah, so much coming out investors this week and what it might mean going forward. So he looks at all asset classes, so it'll be interesting to see what he has to say. Hey, a story that caught our attention, we talked about it a lot on our morning call, Google's challenge to Nvidia as the big tech hyperscaler bets on new chips to boost AI results. So it's kind of like, hey, Google, hey, Nvidia. Maybe we're coming for you.
Maybe.
I'm not quite sure what it means.
Maybe Jensen will talk about it at 5 o'clock today.
He is. He's at an event. So we got a lot coming your way, folks, over the next couple of hours.
First up, though, a check of the day's trade and top business stories. Charlie Pellet's got a close eye on everything happening. He joins us from the Bloomberg studio. Hey, Charlie.
Thank you very much. And here's what's going on. We have got the Dow, the S&P. They are all trading lower. Oil higher right now. Let us begin with what's going on with West Texas Intermediate crude. 89.26 where we stand for a barrel of WTI, up now by 6.5%. We've got a barrel of Brent, the global benchmark, at 95.26, up 5.5%. So oil higher, stocks lower. The S&P 500 index just below 7,100 right now, down 26 points, a drop there of 0.4%. Dow Industrials down 115, decline there of 0.2%, while NASDAQ is lower by 116 points, down 0.5%, and the NASDAQ 100 index also lower by 0.5%. For the S&P, for NASDAQ, and the NASDAQ 100 index, all retreating from Friday's records. The Russell 2000 index of small cap shares on a down day for much of the market. It is up now by about 0.3%. The VIX just above 19 with a 10-year at 4.25%, the 2-year 3.71%. Gold is down $20 the ounce to $48.10, down 0.4%. And West Texas Intermediate crude again up $5.50 a barrel, 89.36 on WTI. That is a gain now of just about 6.6%. The oil majors all advancing right now. ExxonMobil up 1.7%. Chevron little changed, up 0.1%. ConocoPhillips up by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So some of the headlines when it comes to the U.S. war with Iran, and we have U.S. seizing Iranian-flagged vessels by force in the Gulf of Oman. The vice president is said to lead a delegation for another round of Iran talks to happen tomorrow, although there's been some back and forth about what Iran says.
Iranian state TV said no plans for Tehran's negotiations to attend talks. As you mentioned earlier, Carol, the Strait of Hormuz effectively cut off for maritime traffic. So I think it's fair to say different signals than we got from the president last week about the strait being open.
Yeah, totally. All right. We also know President Trump has said it is highly unlikely he would extend the 2-week truce if an agreement is not reached before it ends. We want to get into it because the president said that to our own Bloomberg News, Washington and White House correspondent Jeff Mason. He caught up with the president earlier today. Jeff joining us right now from our bureau in Washington, D.C. Hey, Jeff, good to have you here. Great to hear your reporting on all of this. Tell us about this conversation, how it went down.
So I gave him a call, and he picked up, and that's how it starts. And then we talked about the war. And the president said, I think the news flashes or highlights from that conversation were, number one, he said he's not in a rush and won't be put into a rush to achieve a deal with Iran. And that's a little bit of a shift from the language that we were hearing from him last week, which was much more along the lines of, we're already there, the deal is pretty much done. But today he told me that he does not want to be pushed into a deal that ends up being a bad deal. He also said go ahead.
No, one thing I just want to say, this is the president, the art of the deal, right? He knows how to make deals. Does it feel like negotiating back and forth? Or does it feel like, I don't know. How do you describe it?
I think that's certainly part of it, that there's a negotiation tactic here. I think there's also just a deliberate choice to send mixed signals, and that's what he's done really since the beginning of the war. And he did that really in our phone conversation as well, because in addition to saying he was unlikely to extend the ceasefire, he also said he thought that the talks could work out well for all parties. And he said to me he hoped that I would report that. So both of those angles are in the story, because it's our job to get in the reporting out there of what he said. But the larger, I think, part of the message that he was giving when we spoke is that he's not ready to just agree to any deal, and he's not willing right now to give additional breathing room other than saying that the ceasefire expires on Wednesday night, Washington time, which is actually a day later than most people assumed. Most people assumed that it was expiring on Tuesday night.
At the same time, Jeff, the president also renewing his threats on civilian infrastructure in the region. What can you tell us about the messaging there and how it worked last time to get Iran to the table, and whether or not the United States could actually end up attacking that type of infrastructure?
Well, I think he's certainly wanting to leave that option on the table. And I asked him about that again today, too. And he said he didn't need to repeat that threat, but Iran would be hit very hard if there's not a deal. So, and we also know, of course, Tim, that there are lots of U.S. assets still in the region. He did not remove those assets during the ceasefire period. So he's got the ability and the military assets to do additional strikes and to start up the fighting right away if he wants to. And I did ask him about that in terms of if the ceasefire does not get extended. I said, would you expect the fighting to start then right away afterwards? And he said, if there's not a deal, I would expect that.
How it went down, how much time did you have? Did you feel like it was open-ended, that you could talk longer if you wanted? And I am curious if there's stuff, and maybe you don't want to go into it, but questions he didn't want to answer.
You never know how much time you're going to get. Our call was about 7 minutes long, which is pretty lengthy, actually.
Yeah.
And what I will tell you in terms of some color from the conversation is I got under his skin without meaning to by asking him whether he thought Iran had any leverage, or whether Iran had leverage really because of the Strait of Hormuz. Totally legitimate question. Also, I think the answer is pretty clear to that they do, because they've been using that leverage. But that upset him, and he went off on a little bit of a tirade against me and said that Iran doesn't have leverage, that he has all the leverage. He referenced the last 24 hours and said that there are another 5 boats or 5 ships that he could take over if he needed to. So there were ups and downs in the call in terms of tone, but the newsy bits are the ones that we already discussed.
Yeah, and I will say, in terms of leverage, everybody who comes in and sits around this table, I mean, the Strait of Hormuz is huge leverage, right?
Yeah,
like we all know it, right? I think it's fair to say.
Yeah, Jeff.
And he may just not want to acknowledge that because he doesn't like to give any suggestion that anyone aside from he himself has leverage. But it's true. Iran obviously does. And in fact, they've been using that leverage in a way that they hadn't before prior to this war.
We are set to hear potentially from J.D. Vance post-negotiation. Potentially. He's leaving later on Monday to resume negotiations, either Tuesday night or Wednesday morning, the president told you. He's expected to be joined by Trump's son-in-law, Jared Kushner, Special Envoy Steve Witkoff, as he reported. Do we have any inclination of what a deal could look like in terms of uranium enrichment, a pause there, 5 years, 20 years? What's the latest reporting around that?
Well, the president has said before that he doesn't want any time frame on that, even though at the last round of talks, I believe it was Vice President Vance who proposed or talked about a 20-year essential moratorium. That's not something that the president was happy about, and he reiterated today to me, as he has in multiple other public statements, that Iran cannot have a nuclear weapon in any way, shape, or form. So that's going to be the main goal, is to find a way to address that. I did ask if there would be surveillance, which was a part of the JCPOA, the agreement, the Iran nuclear agreement that was put together under President Obama's administration. And he said, we're going to have everything we need. So it wasn't entirely a yes to surveillance, but he suggested that they would have everything that they needed. That will be a big question, is whether or not international monitors will have the opportunity or the ability to go in and check, which is something that they did have under that last agreement, which President Trump pulled the United States out of and has been very critical of.
All right, great stuff. And I know we're going to be coming back to you over the next couple of hours. Look forward to it. Jeff Mason, thank you so much. Jeff, of course, Washington and White House correspondent at Bloomberg News, joining us from our bureau in the nation's capital. All right, everybody, from the U.S. war in Iran, what the president is saying, and the latest on Washington, to possible battles up on Capitol Hill this week, maybe.
Perhaps.
We'll see. Yeah.
As President Trump's pick to be the next chair of the Federal Reserve, Kevin Warsh, we got a preview of what Kevin Warsh plans to say here to explain what to watch out for as he heads to the Hill. Bloomberg Economics U.S. and Canada economist Stuart Paul joins us here in the Bloomberg Businessweek studio. You got our attention earlier today when you sent us this appeared to be early draft or potentially what the Fed chair nominee will say to Congress tomorrow. First of all, it's surprising to get that out there ahead of time. What was in it, and why do you think this saw the light of day?
It's interesting. I'm not entirely sure why his prepared remarks were released before the actual testimony takes place tomorrow. What is interesting is that I'm already getting ahead of myself, chairman designate or nominee to be the next chairman of the Fed, Kevin Warsh, focused entirely on the Fed's monetary independence. That's to say that the Fed is responsible for any inflation that occurs in the economy and so needs to set interest rate policy accordingly. But he specified that the Fed is responsible to both the executive branch and the Congress in any additional responsibilities that it takes on, including bank regulation and any other attention that it gives to issues basically beyond setting monetary policy.
So the Fed is responsible for any inflation? So even a supply shock, such as what we're seeing right now with the Strait of Hormuz being effectively closed and an increase in energy prices, that could be, in his view, attributed to the Fed?
That's the line in his prepared remarks, and it struck me as shockingly hawkish, especially for somebody who's being appointed to the role with the expectation from the president that he's going to deliver interest rate cuts. Now, the political mind that I have, or my political brain, kicks in and says that he needs to assert some degree of independence. He needs to sound somewhat hawkish if he's going to appear politically independent. So this could all just be political rhetoric. It could be a little bit of theater. But this is also very reminiscent of the Kevin Warsh that we knew when he was a governor 20 years ago.
I want to dig into that, but it also gets to so many members of this administration. I don't think I'm speaking out of turn, but if you go and watch some of those confirmation hearings, they seem to toe the line and kind of say what they should or what they expect members of Congress to hear, that, you know, we're going to do the right thing, I'm going to take my job seriously. And then once they get into the job, they kind of do the president's bidding. I don't think I'm speaking out of turn. Do you feel like Kevin Warsh could possibly be doing that? He knows to get the job, he probably has to say certain things, no?
I think there are three certain truths that we need to keep in mind as we head into tomorrow and tomorrow's hearing. The first is that this is all political theater. So you're exactly right there. He's going to say what you expect him to say. He's going to sound reasonably hawkish. We know the Democrats on the committee are going to really ask him his opinion about the DOJ's investigation of the Fed and the Fed's independence. They're going to say that he's perhaps unaware of what's going on the lower end of the income distribution. The Fed needs to deliver economic outcomes for a broad swath of Americans. We know in advance that that's what's going to take place. The other two truths that are equally important and perhaps most important for markets are he doesn't have the votes to get through committee. Tom Tillis, Republican senator from North Carolina, is not going to allow him to move through committee. And then even if he does move through committee, he's not going to have the votes on the FOMC to deliver big interest rate cuts. So we need to keep all three of those facts in mind as we head into tomorrow.
There's a checks and balance on that Fed board, right?
That's right. There is a certain degree of checks and balances when it comes to who gets to set monetary policy and who gets to decide on the path of interest rates. And the Fed chairman alone, the chairman of the board of the Federal Reserve System, does not have the single vote that decides. Instead, he needs to really build a coalition. And right now, it's a hawkish committee.
Yeah.
So let me present you with a hypothetical then, Stuart, if we're going to play this out. And if Kevin Warsh gets approval, and if, let's say, Senator Tillis drops, his opposition, Fed Chair Jay Powell actually ends up stepping down, and there is some sort of transition here. Does the path for Federal Reserve rates this year change when that happens?
Probably not very much. Okay. Probably not very much. The first thing that we need to keep in mind as we count votes is that if we were to end up seeing Kevin Warsh ascending to the Fed, which is a big if, he would take Myron's seat. So the most dovish person on the committee ends up leaving. You then end up having someone who's basically a moderate in Chairman Powell stepping down for the sake of tradition, effectively. And the real swing votes, the people who are probably most important right now in setting the thematic trajectory of interest rates, of policy rates, are regional Fed branch presidents who are hawkish. And so he's just not going, even if he were to ascend to the chairmanship, even if everything evolves as it typically does, he's probably not going to have the votes on the committee to deliver the sort of interest rate cuts the president wants or that Stephen Myron says that he wants right now. And he's not going to be able to make it through committee as long as the DOJ investigation is going on and Republican Senator Tom Tillis from North Carolina has his foot firmly down. He is not going to allow any Fed nominee to move through while the DOJ investigation is ongoing. So my motto has really been for the president, he gets to decide, investigate or interest rate. And even if he chooses to have his Fed nominee move through by dropping the investigation, he still might not get that interest rate cut that he's hoping for.
Right. So can one assume that if Kevin Warsh is his own man and he gets this position, that we then will continue to see for the next couple of years or 2.5 years a president that puts pressure on the U.S. central bank? And that's not a good thing for anybody.
It's not a good thing for anybody. I think that if we were to see Kevin Warsh ascending to the chairmanship of the Fed, I think that he would focus on some of the other initiatives that might matter for the administration. He might focus on shrinking the Fed's footprint, the Fed's balance sheet, shrinking the degree to which the Fed interacts with shrinking the extent to which the Fed is participating in bank regulation, and even and instead focusing on deregulation and reining in the Fed's interest in other things, let's say, climate policy and encouragement of reductions in banks lending to fossil fuels and other sort of energy producers. I think that those are ways that he could placate the administration without truly delivering the interest rate cuts that he needs. And I think that he has somebody in Secretary Bessent that understands that swift interest rate cuts wouldn't necessarily be great for long-term financing costs anyway.
Global markets and global investors have a way of reacting when they feel like the policy's wrong. We all know that. Hey, Stuart Paul, thank you so much. Bloomberg Economics, U.S. and Canada Economist. When we come back, we continue to talk about what's going on in the markets. We do that with Rich Weiss of American Century.
It's 2:22 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower. This is oil advances. West Texas Intermediate crude up 6.7% right now. WTI just below $90 a barrel. Brent crude, the global benchmark, 95.18. Barrel of Brent up by 5.3%. A rally in oil is driving stocks lower as that turbulent weekend for the Middle East casts doubt on prospects for peace talks between the U.S. and Iran. S&P right now down 18 at 7107, a drop there of 0.3%. We do have the Dow Industrials down 22, little change, down now by under 0.1%. And NASDAQ down 88 for the NASDAQ Composite Index, a drop there of 0.4%. An update for the Russell 2000 Index, small cap shares are gaining. The Russell 2000 up by 0.5%. The 10-year 4.24%, the 2-year 3.71%. Spot gold is down $16 the ounce to $48.13, down 0.3, and West Texas Intermediate crude 89.50 a barrel, up by 6.6%. Eli Lilly shares little change now, down under 0.1%, a $7 billion deal in the pharma industry, with Eli Lilly buying privately held Colonia Therapeutics for as much as $7 billion. Lilly gains access to a potential cutting-edge approach to treating blood cancer. Again, Eli Lilly shares down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And that, Carol and Tim, is a Bloomberg Business Flash.
It is indeed. Thank you so much, Charlie Pellet, really setting us well for our next guest, talking about this rally that we're seeing. But we're off our highs of the session. I mean, the rally we're talking about, last week's rally where we saw several records taken out on those major equity averages. We do have stocks a little bit lower. You've got oil higher. Not the weekend that we thought it was going to be, Tim, when it comes to the U.S. war in Iran. I think we thought there were going to be talks, some progress. It didn't exactly play out that way.
But it kind of reminds us that things can change in a minute.
Absolutely. Exactly. And that's kind of where we are.
In fact, I'm surprised we're not seeing a bigger market reaction.
Yeah. Well, I think, it's an environment we keep talking about that investors look kind of for a reason to buy, certainly on the equity side of things. But let's see what our next guest has to say. In fact, looking through his notes, he points out that repositioning now depends on as much as your personal situation as it does on the macroeconomic and geopolitical environment. Great to have back with us. It's been a while. Rich Weiss, he's Chief Investment Officer of Multi-Asset Strategies at American Century Investments, which has about $330 billion in assets under management. He's back here in our studio. Hello. It is good to have you here.
It's great to be back. Good to see you both.
Tell me about this environment and how you see it and how you keep thinking about the war. Do you feel like we should be looking through it at this point?
I'd say the market's looking through it pretty clearly. And, as far as the war is concerned, if someone's looking to bet on the war, its duration or severity, or bet on oil prices, go to Kalshi or Polymarket and make your bet there. Don't rejigger your longer-term investment strategy on that kind of element. But I think there's one explanation for why the market is hitting new highs despite low consumer confidence, inflation expectations up, inflation up. Most economists are ratcheting their expectations for real GDP this year downward. How could the stock market be hitting new highs? The one explanation is politics. It's the midterm elections. I mean, if there's one thing they're concerned about, they have to get this war resolved in order to keep at least one house, if not two. I'm talking about the Republicans. So I think that's paramount here. That's what the market is looking at. That also explains why Fed funds futures can't seem to decide whether rates are going up or down. They're clearly going to go down. So
let's start with the markets, because in other words, you're saying that investors are betting that Republicans will end the war ASAP, get energy prices down so inflation expectations come down ahead of those November polls?
Well, it'll take a little while for oil prices to come down, maybe weeks, months, right, just to get production ramped up.
Pretty risky politically.
But to get an end to this, or some kind of truce in place, because as it keeps going, it's just a debacle.
One thing on that, though, is that I think that it's challenging because, as Iran has indicated, giving up enrichment doesn't seem like it's going to be one of the concessions that the country would offer. And it seems like the president doesn't want anything short of that. We just spoke with Jeff Mason in Washington, who said the president wasn't a fan of any timeline delaying or stopping enrichment for 5 years, 20 years. He wants to see forever.
And with all due respect, the president says a lot of things which then reverse the next day. So the president said he's under no pressure. I'm not sure that's the case. I think the Republican Party, the White House, the administration is under quite a bit of pressure to get this result by their own party. For real humanitarian reasons, but also for political reasons.
Rich, I think it's interesting because I think there's an expectation. There's a lot of folks, some momentum based on some of these, elections that we've seen in different states and different areas around the country where Democrats have either won or put in a strong showing. And I think there is a line that's being pulled through to November in the midterms thinking that, that the Democrats are going to be back in power. That's not a given in your view. You think equities, let's go to the equity markets first, that they're rallying on those expectations that Republicans will be back or can maintain power.
Right, at least one of the houses, right, that they won't lose both. And that's the imperative there is that to find some resolution, short-term or otherwise, for this conflict in the Middle East. Yeah.
So let's go to, you said clearly rates are going to go down. Why? Why do you say that?
Well,
because of the growth slowdown, or what?
A combination.
Okay.
But I believe one, again, political pressure. Bringing rates down lowers borrowing costs. It gooses the economic growth. Potentially gets the housing market restarted. So it's good for Americans to get interest rates down for business investment, et cetera. So it'd be a great thing if they could do it. I believe the administration, the president, wants that to happen. I assume Kevin Warsh will be placed.
But that's not what the Fed chair's, responsibility is, right? It's to look at inflation, look at employment. That's the dual mandate,
right.
And then figure out the right policy. And it's not only always comfortable. Just go back to Paul Volcker and ask him. It's not always comfortable what you have to do as Fed chair. So, what is more important, to have a Fed chair that looks at the data and does the right policy, or succumbs to the White House?
I believe he can do both.
Why?
Because you can come up with a viable economic rationale for lowering rates, which is what his mandate is going to be from this president who handpicked him. He's out of central casting. I think the president said that himself.
Yeah.
And the economic rationale is inflation is an existential threat and it is causing demand destruction. I think that's the phrase to look for or listen for. Demand destruction, you already see it happening. Economists are lowering their GDP forecasts for this year now to somewhere around 2% real GDP and maybe even lower as this conflict continues. So there is a viable economic rationale for lowering rates despite inflation being problematic at the current time.
But then don't you worry that by lowering rates and creating even more liquidity in the market that you drive inflation even higher? And so you get to that point where we have stagflation of lower growth and higher inflation, which is not anything that anybody wants.
Well, the hope there is you'll spur economic growth, right? And so inflation then is a secondary effect which you'll take care of afterwards. That's one hypothesis. I firmly believe rates are coming down with this new Fed.
Well, that's the Fed side of this. What about the Treasury side of this and yield curve controls?
Yeah, I think, well, there's, I describe, the Fed is the left hand of the president, and then Treasury's the right hand, right? And president's a good fighter and a 1-2 punch. Secretary Bessent, what he came out a while ago, he referred to the U.S., I think it was, as insolvent, which I'm not sure. That's a pretty strong word. I mean, we're not bankrupt, right? But I think he was referring to the fact that interest expense now is at a level where we can't support it with current annual revenues. So it's a fair definition. But Secretary Bessent may come out and could pair with Kevin Warsh or the Fed and implement what's known as full yield curve control. It's something we've done before where you pull down not only short-term rates, but long-term rates. We did it in World War II. It helps spur the economy. It lowers your debt expense, your interest expense. It's a wartime maneuver. Japan did it. I think Australia did it recently. It's problematic when you do it when you already have inflation because it can be inflationary. Again, back to that problem. But it's very likely or possible Secretary Bessent will also move to lower rates to help the economy lower the debt burden. And that it's good.
How about not
there's good
spending
precedent for
much? How about spending less?
Why does this always come up, Carol?
I mean, no offense, but I mean,
it. Right, you are.
you do a lot of deep dives. Hank Paulson, David
We talked
Weston,
about this last week,
doing
yeah.
a great interview with him. Saying you have to, what is it? Have
Shatter a glass.
shattered
moment.
glass, like program,
Broken glass. Yeah.
to deal with where we are headed. This is not a new problem,
Right.
but it does look like it's getting unsustainable. And especially when you look at the president's planned spending of was it 2.2 trillion, I think it is, and about 1.5 on defense.
Yes.
Are we a war economy now? You're cutting on all the other programs. Is this America today?
Well, I am afraid so. It's a tough. I'm glad it's not my job to figure it out. But I think.
But you know what I'm saying? When you're spending on so much of that, and you're not spending on some other programs that are important for many citizens.
This is
and
for
social programs, but also, that feeds back into the economy.
certainly, and this is the old defense versus social
Guns versus
programs.
butter,
This
yep.
is the old red blue debate, right?
Yeah.
And far be it from me to solve that one. So I think the numbers I saw were something like 25% of Social Security and or Medicare would have to be cut in order to get the debt burden and the deficit back in line. Now that's a non-starter, right? No,
You know who
nobody's gonna
votes?
be able
Because
to
you know who really votes? People who get Medicare.
Well, there's the other
older
side.
folks.
But the other side of the equation is taxing. And that's
Yeah,
also
that's true.
another political third rail.
Right.
You're not going to find anyone who's going to come in there and raise taxes, but there is the tax bill that the president passed through last year, and I'm wondering if the country will be able to pay for that with growth rather than through revenues.
That was certainly the hope at the time. I'm not sure it's coming out that way now, especially with the war and the oil prices now, which are essentially taxing Americans, even though they are getting refunds from the one big beautiful bill. So one's canceling the other out at this point.
Well, and the Secretary of Energy, Chris Wright, talked to, I believe it was CNN, and said that he kind of undercut President Trump's earlier claim that price increases in terms of gas prices would be short term. And he said that they may stay above $3 until 2027. I mean, that's something that certainly impacts a lot of Americans.
Yeah, well, oil price, again, if the strait were
Yeah.
closed tomorrow, right, it would still take weeks or months.
If it were
Right.
open tomorrow.
Excuse
Yeah,
me, open
right.
tomorrow. It would still take weeks or months
Yeah.
for production to really ramp back up. So, envisioning oil below $70, $80 a barrel, that's not happening for a while, no matter what happens politically.
So 30 seconds. I love this macro, deep thought. What do investors do here then?
Well,
Just quickly.
Well, first of all, don't bet on when the war is going to end. That's not a smart move to make. Depending on where you are in your life cycle, what you're going to do. If you're a young investor, you have many years to put money in the stock market, you're earning, you buy on these dips. I mean, if you have a 20, 30-year horizon. On the other hand, you're a retiree or near retirement, and you're already maxed out in equities because the equity market's been so strong last few years. Good time to get out or move out because you can't suffer another 20% if that were to happen.
We've talked to Rick Wurster, Rick Wurster of Schwab, the CEO, and he has said that you do see the younger folks buying on the dips throughout this war. Rich Weiss, Chief Investment Officer of Multi-Asset Strategies at American Century Investments. When we come back, we're going to talk about Alphabet and chips.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower, oil higher. Let us begin with what's going on with crude. WTI West Texas Intermediate up now by 6.5%, back at 89.27 a barrel. Brent, the global benchmark, at 95.79, up now by 6%. S&P lower, stocks declining as oil rises. The S&P is at 71.03, down 22, a decline there of 0.3%. Dow Industrials down 0.8%, down by 74 points, down 0.1%. We do have NASDAQ down 93, drop there of 0.4%. The Russell 2000 index higher now by 0.5%. A 10-year at 4.25%, with the 2-year 3.71% on the 2-year, while gold is down 0.3%, 48.13 for an ounce of the precious metal. Spirit Aviation Holdings is floating, offering the U.S. government an equity stake to help stave off its potential liquidation. That, according to sources. Any proposed bailout, however, would be likely to get pushback from competitors that are also struggling with high fuel costs. And a source tells Bloomberg the family that owns the maker of Jack Daniel's whiskey, Brown-Forman, favors a potential sale to the French distiller Pernod Ricard over an alternative proposal from closely held American rival Sazerac. Again, recapping, stocks lower, S&P down 21, drop there of 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie. Well, Charlie giving you a rundown of the markets. I want to just pull up shares of Marvell Technologies because that stock has been on a bit of a rally today. Yeah, it's pretty much near its highs of the session, up about 6.4%. This after the information reported that Google is in discussions with this semiconductor company to develop 2 new chips to run AI models more efficiently. And then we have our own Dina Bass of Bloomberg reporting out that in a matter of months, Google's AI chips have become, Tim, one of the hottest commodities in the tech sector.
This leading artificial intelligence developers, some of the firm's biggest rivals, are actually stocking up on them. I was also just looking at shares of Marvell this year.
Yeah, what
up 75%.
Not too shabby.
Yeah,
right?
not too shabby.
A little outperformance there.
I think that's fair to say.
Let's get more, though. We're interested in what Google is up to and what they've been doing. It's not just recently, but for a while now. With us is Dina Bass, Bloomberg News AI infrastructure reporter. She joins us from Seattle. Hey, Dina, great reporting, interesting story. It does feel like, though, increasingly we're in this world where these big tech giants want to make and are making their own semiconductors. Tell us about Google, because they've been, designing chips for over a decade, but what's interesting about what they are doing right now?
So first of all, you've mentioned in a matter of months. Let's talk about what's likely to happen in a matter of days. Later this week is Google's next conference in Las Vegas, and as we reported in our story, they are likely to announce at that conference that they are releasing a version of their chip, a TPU, for inferencing workloads. So inferencing is when you've already got an AI model that's trained and you need to run it. You need to enable it to answer people's questions quickly. So we're reporting they're probably going to announce a TPU for inferencing. And that would sort of, as you mentioned, individual companies doing things, some of what's gone on in the last couple of months also is this focus on, low latency or very fast inferencing. So if we're getting into a world where people are looking at agents and things that need to be more conversational, you want to be able to answer those queries quickly. And so last month we had Nvidia, which is obviously the giant, the dominant player, releasing a fast inference chip based on the technology they acquired from Grok. I know Cerebras just filed their IPO. They're also in this fast inferencing space. And so now we're expecting that Google is going to get more fully into that space with a chip that's specific for that task, whereas up until now, as Nvidia had in the past, Google's been, using one set of TPU model for both training and inferencing. So that's what we're expecting, later this week. Google's chief scientist, Jeff Dean, told me in an interview, look, there's all this demand growing for fast inferencing. And he said, quote, it now becomes sensible to specialize chips more for training or more for inference workloads. That said, the head of their chip division, Vedant, declined to say specifically what they're going to do later this week. But, he did say that more will be shared, quote, in the relatively near future.
Okay, so before we get to the relatively near future, we're here in the now, and we have what you've reported, which is just absolutely amazing. And I'm curious about Nvidia and the competition that this could or potentially would pose to Nvidia, which, as you mentioned, and we all know, is the market leader when it comes to this stuff.
So I think you have to remember that it's not just that NVIDIA is the market leader. Everyone uses NVIDIA. That everyone includes Google. Google's latest Gemini model, however, which has been very well reviewed and very successful, was trained and on TPU and uses TPU for inference. Now, last week there was a podcast with NVIDIA CEO Jensen Huang and Dwarkesh Patel, in which Jensen talked about the TPU threat and said, look, the growth in TPU is all Anthropic, which is a huge, obviously a huge Google TPU customer. But, Jensen's argument was, look, this is not a phenomenon. It's a one-off customer. I spoke to Demis, Google DeepMind CEO, and he pushed back on that. He said a lot of customers do want to do what Google does, which is use both GPU and TPU. And in fact, the problem for Google is that they don't quite have enough supply to meet that. We talk in the story about some other customers, about Meta, about Citadel Securities. But, Demis's comment is that they don't have enough supply to meet all the interest. And so for now, at least, they're prioritizing the really high-end, frontier model teams who he said really are, best able, best skilled to take advantage of the, the advantages that TPU brings. And then, we talked a lot about what those advantages are. I think from Google's point of view, what helps them is the fact that they co-design the TPU chips with both the hardware team and the folks at Google who work on those leading AI models. And that gives them a view into what you need to successfully, design a chip that trains and inferences great models. It also helps them see problems more quickly. They argued to me.
Does Nvidia need to be worried here, Dina?
Nvidia is still the dominant player. Everyone that I talk to expects them to be the dominant player for the foreseeable future. I don't know that I think there's a different metric of success for Google TPU and Nvidia. Nvidia success looks like continuing to dominate the market, starting to pick up some of these newer growing workloads in a significant way, such as the fast inference. TPU is coming from a place of being so much smaller in terms of share. It's really more a question of, can they pick up some share? But also even more than that, they have to decide what they want to do and what they want to be. NVIDIA sells chips for companies to use in their own data centers in whatever way that they want. Google has thus far almost exclusively focused on giving you access to TPUs through their own cloud. Now they're starting to experiment with some other models. Anthropic, for example, has been able to, do with Google some experiments where they're running TPUs for Anthropic in data centers that Anthropic controls rather than through Google Cloud. But Google has to figure out, do they want to be a chip seller like NVIDIA? That's not tied to their cloud? And then also with that limited supply, how do they allocate between customers who want a certain amount and not everyone can get what they want, as well as all of the Google workloads that are using the TPUs and, including Gemini, including Google Search. That's also a question. They sort of have to figure out where they want the business to go. It's not quite the same thing as NVIDIA.
Why, and we only have about 30 seconds left, Dina, but why sort of this identity question? Like, why wouldn't Google try to do both things really well?
I think it's just a question of where they want to go and where they want to invest. NVIDIA is, a chip company that also does some AI models, and they do some of NVIDIA's AI models are increasingly excellent. They're very open source focused, but they're a chip company coming at that space. Google is a company in a lot of different areas, including, cloud and search and AI models before they're a chip company. I think they have to figure out what the chip portion, where that fits in and how it helps them.
Sounds like TBD, and let's see what we get out of the announcement. What are just real quickly, 10 seconds, the announcement, so just the detail, the devil in the details, or what?
I think we'll have to see what they say and when they're available. And, again, this is, Next starts on Wednesday. So keep your eyes peeled for what they say.
We certainly will, and we'll be looking out for your reporting as well. Dina Bash, she's Bloomberg News AI infrastructure reporter joining us from Seattle.
Hey, coming up next, we got stocks on the move on this day where oil is higher and stocks are lower. This is Bloomberg.